Yo, what's going on, guys? I'm not a financial advisor. This is not financial advice. Other thing is there are 50% off resets on Apex. So, again, I see a lot of you guys, some of you guys fail them during like FOMC and CPI. Okay, just a friendly reminder, do not trade them during CPI or FOMC, but there are 50% off resets if you want to do that. And if you want an account, okay, click the link in the description. They're super, super good to practice. They're better to practice on the demo, and they're very stress-free. If you are a Forex trader, I strongly recommend trying Apex and trading the indexes because the indexes are way cleaner. So then if you want to watch me live stream every day, I live stream every single day from like 8:30 or 9 all the way to like 11 or 12 o'clock. Okay, click the WAP link. Okay, my premium is probably one of the cheaper ones on all of Twitter and YouTube. But yeah, so we're going to get started with this video. In this video, I'm going to be going over the most important concepts in ICT that I've learned, or I've kind of learned and I've kind of created a model based off of. Okay, and there's three of the concepts. Okay, there's a lot more concepts than just these three. Okay, there's multiple different PD arrays. Okay, there's fair value gaps, there's volume imbalances. Okay, there's new week opening gaps / new day opening gaps. Right, there's discount / premium. Okay, discount / premium. There's order blocks. Okay, there's all kinds of concepts, but I'm going to be showing you guys the three that I think are the best and I think that you can create a strategy based off of. Okay, and this is going to be a little biased because I've already talked a lot about inverses, so you already know what one of them is going to be, but I'll show you kind of how I combine some of them with my inverse strategy. Okay, which I might not make as obvious on Twitter. Okay, because whenever I'm looking for an inverse, sometimes I'll see if it's lined up with something else I won't mention, and if it is, like it's a better play. So I think the number one concept I've learned, okay, is inverses, and he really hasn't talked a lot about this in his 2022 mentorship. It wasn't really till like a couple months ago, okay, but I started using them about 5 or 6 months ago, and I just realized how well they worked, and I created my own model off them, even though ICT didn't start talking off them. Okay, and the reason why I think inverses are so important are because it's like support and resistance. If the support fails, well, it's probably going to work as resistance. Vice versa, if the resistance fails, it's probably going to work as support. So with like a fair value gap, okay, so with a fair value gap or something, like if we go in the hourly right here, okay, we see this being respected, and then we see it inverse, and now it works for support. So like the reason why I like inverses so much is because if you just wait for the inverse instead of trying to short this, right? Let's say you don't even short this. Let's just say you're waiting for it to turn into support. If you don't even try to do it, like if you don't try to short the fair value gap, there's no chance you take a loss, because if you kind of struggle with, okay, should I short this or not, which I kind of did at first. If you struggle with knowing whether you should short this or not, okay, using inverse is going to be perfect for you because your trigger or your condition is going to be, okay, if this is inverse, then I'll take the long. Okay, I'm not even thinking about short because I don't know if it's a good fair value gap to short. So like it's kind of like a support and resistance. Like, okay, if this gets inversed or violated, a close above, I'll long. But I won't even try shorting it because I'm not sure if this is a good short. So you kind of set a trigger for yourself. We get the close above, and now you go, okay, this was inverse. Now I'm looking for a long. Okay, same thing with something like right here. Okay, you shouldn't even be worried about going with the direction of the fair value gap. Okay, because you don't know if it's going to work or fail. You can just literally just sit there and wait to see, okay, if this is inversed, I'll go short. Okay, and sometimes you're going to sit there for a while and it's just not going to get inverse, which is okay. Like sometimes you will go like this. But if you're not confident if we're going to bounce off a fair value gap or not, the best case scenario is to wait to see if it gets violated. And then you go, okay, well, we didn't respect it to this side. There's more of a chance we're going to respect it to the other side. Okay, and that's why I like it so much. If you're a little more of a seasoned trader and you know if we should bounce off this or not, then that's fine. But if you don't really know what you're doing yet, I think inverses are your best option because you can wait till it fails and then go the other way. And there's more of a chance that you're right about that if it fails than a chance of it going the way you want it to. Okay, and the only reason I wouldn't long a fair value gap like this is because, one, there's no displacement above this high, and two, we're redelivering from a fair value gap right here. I know it's big, but we're redelivering from a fair value gap. So if you are new and you're wondering, well, why doesn't this work in the first place? Okay, it's because we're redelivering from a fair value gap and there's no displacement above here. Okay, so again, inverses are my number one strategy in my opinion that you can learn, because there's more of a chance of it working the opposite way if it doesn't work the initial way, and it helps just if you don't know what you're doing there. Okay, so that's my number one thing. Okay, and the second most important concept, okay, which, by the way, I'm actually going to combine, so I'm going to talk about fair value gaps next, okay? I think that's the next most important concept, okay? Just normal fair value gaps, not inverses, but just normal fair value gaps. Okay, and the basics of a normal fair value gap is, when should you know a fair value gap works? Okay, you should know a fair value gap works when we take some low or some high. Okay, so some low or some high. So for example, let me see if I can find a textbook one real quick. Okay, so like right here, we barely displace above this high. Okay, we have some sort of market structure shift, which is right here. Okay, so let me just put this dotted line, and then we get a fair value gap. And this is the second most important concept, okay, because once you get more seasoned and once you see the setup, you know this should work, okay? You're not really, yes, there will be traders that use my strategy that may not know if it's going to work, and they'll kind of sit here and wait, and they'll be like, okay, if this is used for an inverse, I'm going to long, right? But this one, obviously, if you were doing that, you wouldn't get a trigger. There's no trigger here because there's no close above. So in this case, you just do nothing. Okay, but other traders are going to know this actually should work for a short, and they're going to take this and short it because they're expecting it not to be used as an inverse. Okay, and the reason why I think this is the second most important strategy that ICT teaches is because this is really how the market moves from fair value gap to fair value gap. And once you kind of get that down and get, okay, we're breaking structure here, fair value gap here, this should work. Once you get that down, okay, you can go a long ways. Okay, and I feel like as a new trader, inverses are going to be easier to use and easier to get plays off of because there's more of a chance of it working the opposite direction if it fails. But once you get more seasoned, you'll kind of know if it's going to be used for an inverse or not. Okay, why would I not expect this to be used as an inverse? Well, it's because we already purged buy side. So if we already purged buy side and we don't really have any displacement above this high, do I really think we're going to go back to this high? Okay, probably not. So I'm not really expecting this to be used as an inverse in the first place. Okay, so if you want to take more plays, throughout the day, right, you're going to have to get used to, okay, this shouldn't be used as an inverse. This should be used to continue this direction or whatever it may be. Okay, and you can obviously take more plays once you learn that because you're going to know what fair value gap works or not. Okay, same thing with like this fair value gap down here. Okay, you can see if we were to go on like the 4-hour daily time frame, this is a clear daily or 4-hour market structure shift. Okay, it's not a liquidity purge because we go way beneath it. It's a market structure shift. So like you would expect this not to be used as inverse, and you'd expect it to work for a short because of this market structure shift. And when you can get that down, okay, you're not going to get annoyed because for you guys using inverses, you're just going to be sitting here waiting, okay, will we inverse this so I can go long? And you're going to find out 2 hours later, well, we didn't, so you're just not going to get into play. Versus if you understand fair value gaps and inverses, you'll understand that this fair value gap shouldn't be used in an inverse, and you might take it this direction instead. Okay, so if you use fair value gaps and you understand fair value gaps as well as inverses, you can kind of figure out, okay, this fair value gap should be used as a fair value gap, or this fair value gap should be used as an inverse fair value gap, okay? And that's how you're going to get the most trades, and that's how you're going to understand the market the most. Okay, so that's the second most important concept. Okay, the third most important concept, I would say, is probably discount or premium, okay? I would say order blocks come a close fourth place, but I'm not going to talk about order blocks. I think that's the fourth most important. But the third most important concept that ICT teaches is discount or premium, okay? And all that is you're drawing a fib from the swing high to the swing low, which would be right here. Okay, see how it's swing low and then or swing high to the next swing low. Okay, and premium is basically above the 0.5, right? When you go to the sale, everything above 0.5 is going to be expensive, and everything below is going to be like discounted. So whenever we get below the 0.5, you want to buy. Whenever we get above, you want to short. And the reason why I think this is the third most important is because it kind of gives you like a range where, okay, this is probably going to be a better buy, or this is probably going to be a better short. Okay, and it gives you a really nice range. So like in this situation, if we draw the fib from up here to down here, which keep in mind this is not a fib level, okay, the 0.5 is not a fib level, but I'm just using the fib tool. If we draw the fib from up top, so I'll kind of mark this out, to down here, okay, we know it's probably not a smart short if we're not above the 0.5 level. And I'll generally keep an eye on this because sometimes if we're down here, I just won't short on the higher time frame. Okay, so same thing with like this leg right here. Okay, you can see from this swing low to this, or swing high to this swing low, right? You want to make sure you know or understand the best A+ setup is always going to be in the premium range if you're shorting. And let's say you're looking for a counter, like let's say we're in replay mode. Let's say we just made a swing low right there. And let's say, okay, you still haven't seen us at premium and you want to take a long scalp for a retracement. Well, you know it's going to be smart to kind of long a discount here because you know we haven't hit premium and there's still a good chance we do. So it's like, okay, if you are going against order flow and you are going against the trend and you do see like equal highs up here, you're going to understand that, okay, it's smart to take a long position here even though bearish order flow is present. Okay, it's smart to take a long here because we still haven't hit premium and I'm expecting us at least to hit premium. Okay, so just knowing kind of where we are in the range, whether it be discount or premium, it gives you smarter setups. Okay, without the use of this, you're going to see, oh, V just dumped a ton. I don't really know where we are in the range, but this looks bearish. I'm going to try a short down here. And it's just, it's going to fail and it's going to work sometimes and you're not going to know why it's failed. And most likely, one of the reasons why it fails, even though we're still bearish eventually, is because you're taking it when we're really low in the range. Okay, so understanding where we are, discount versus premium, okay, is very important. Like even in this giant range right here, from this low to this, or this high to this low, right? You can see every time you get to this premium range, you just got to understand that, okay, it's probably smarter to short up here and smarter to long down here. Okay, even though the bias is overall bearish. So the reason why it's the third most important in my opinion is just because it gives you really nice like ranges and it just kind of says, okay, this is smart short or this is a dumb short. Okay, order block comes in fourth probably for me. Okay, I use order block all the time, but I use the top three. I just explained the most, and that's how I kind of use my model. So yeah, hope you guys learned something from this video. Let me know if you have any questions. Again, this is all an opinion-based video. Someone might have a different ranking order, but this is mine personally, what works for me. So find what works for you. Okay, it's important that you don't copy someone just because they said it, right? You don't want to copy people in life. That's not. You want to find your own model. You want to find your own setups, right? So I appreciate you guys watching the video. Let me know if you have any questions on my Discord. Okay, and yeah, peace out.